Hello, dear students. Hope you all are good. Today we will start Unit First. Bank definition and functions, types of banks and their functions. Overview of the session which we will discuss later. Origin of bank, functions of bank and types of bank. Origin of bank. The name bank is derived from the Italian word banco, which means desk or bench, used during the Renaissance by Florentine bankers. These bankers used to make their transactions above a desk covered by a green tablecloth. There are traces of banking activity even in ancient times. In fact, the word traces its origins back to the ancient Roman Empire, where moneylenders would set up their stalls in the middle of enclosed courtyards called macella on a long bench called a banquet. It is from here that the words banco and bank are derived. As a money changer, the merchant at the banco did not invest much money, but merely converted the foreign currency into the only legal tender in Rome. That was the imperial mint. In simple terms, a bank is an institution that accepts various types of deposits and then advances money in form of loans to people requiring it. Money and credit provide the pivot around which all the economic activities revolve. Banks are institutions which accept deposits and use these funds to grant loans. Banks collect the surplus funds of millions of individual savers who are widely scattered. The money so collected is channelized to the investors, people asking for loans for further investment purposes. Banks help in money growth and capital formation. They are reservoirs of resources for economic growth and development of the nation. They help in building the infrastructure, boosting the agriculture, setting up industries, and aid to global trade. Functions of bank. The functions of bank can be specifically discussed in primary functions and other functions. Firstly, we will discuss primary functions of bank, which are acceptance of deposits through savings account, fixed deposit account, demand deposit, advance loans, that is routine loans, overdraft, discounting of bills. Let us discuss other functions, in which two parts, agency functions and general functions. Agency functions are collection of interest, dividend, salary, pensions on behalf of customers, buying, selling of foreign exchange, payment of rent, insurance premium, electricity and telephone bills, collection of checks, promissory notes and bills. General functions, issue of letter of credit, that is called LC, traveler's check, credit cards, ATM cards, debit cards, safe custody of valuables and documents, lockers, special advisory service to customers, electronic fund transfers, that is EFT, internet banking, insurance. Types of bank. So, first central bank, second commercial bank, in which private sector banks, public sector banks, regional rural banks, foreign banks. Third, cooperative banks, in which state cooperative banks, urban cooperative banks. Fourth, payment banks. Fifth, scheduled banks. Sixth, non-scheduled banks. Seventh, small finance banks. Here is detail of types. First, central bank. The Central Bank of India is known as the Reserve Bank of India. The RBI is a financial institution that is mandated to regulate and oversee all of the other banks in the country. So, this is the main function because it oversees all of the other banks in the country and mandate and regulate them. Second, Commercial banks. Commercial banks are regulated under the Banking Regulation Act of 1949, and their business model has been constructed to make profits. The primary function of the commercial bank is to accept deposits and offer loans to the public, businesses, and the government. Third, cooperative banks. A cooperative bank is one that is registered under the Cooperative Societies Act of 1912 and is run by an elected managing committee. It works on a non-profit, non-loss basis, and it will mainly serve entrepreneurs, small businesses, self employment, and more in urban areas. In the rural areas, they will mainly function to finance agriculture based activities like farming, livestock, and hatcheries. Fourth, payment banks. The payment banks are a relatively new banking model in the country that has been conceptualized by the RBI. This bank is allowed to accept a restricted deposit. This amount is limited to rupees 1 lakh for a customer. The bank also offers services such as ATM cards, net banking, and more. Fifth, scheduled banks. These banks are covered under the second schedule of RBI Act 1934 and the need to have a paid up capital of rupees 5 lakh or more. Sixth, non-scheduled banks. The non-scheduled banks are local area banks that are not listed in the second schedule of the RBI Act 1934. Seventh, small finance banks. It is a niche small finance bank in India with the objective of providing financial inclusion to sections of society that have not been served by other banks. The core customers of this bank are inclusive micro industries, unorganized sector entities, marginal farmers, and more. This type of bank is licensed under Section 22 of the Banking Regulation Act 1949 and it is governed by the Provisions Act of 1934. Example are a small finance bank. Thank you. The session is over now.